it or not, this is a question of the day that I get from so many professionals, whether in the health business or in engineering, technology. And one of the things that we want to answer today. So hello, everyone. I'm Sophie Lalonde. I am a cross-border specialist and CEO of 3D Financials. And we're going to answer this question. I've invited my good friend, Beatrice Davila, that is actually a partner at MNP on the international division. So hello, Beatrice.
Hi, Sophie, and thank you for having me.
My pleasure. So it is hard enough to know as a Canadian citizen and resident whether I should incorporate myself or not. But when you add the implication of a dual citizen, I think there's even more question that we should ask ourselves. So what is the first question I should actually ask myself when I'm looking at that?
So incorporation, as we know, is attractive when funds can be left in the corporation to be taxed at corporate tax rate. So this is a tax deferral advantage when the funds are taxed at lower tax rates, as there's more disposable income to be reinvested. So as we know, corporate tax rates are much lower than those applicable to individuals. So for instance, let's say a doctor resident in Quebec earning self-employment income from his practice may be taxed at 53% on that income, assuming he's at the highest tax bracket, while that same income could be taxed at 14%, and this is the small business rate in Quebec, or 27% if taxed in the corporation. So in the case of an incorporated Quebec resident doctor, if we were to discuss this, the corporate tax would be around 21%, and this is mainly due to some changes in the definition of small businesses for purposes of this tax deduction that was introduced in the 2017 Quebec budget. Now, evidently, when this Canadian resident doctor is also a US citizen, will encounter additional complexities. So these US citizen doctors will certainly have not only a more complex and comprehensive tax filing compliance, but also a potential exposure to double taxation. So while this exposure can be minimized or eliminated, we have to take additional considerations to any potential upcoming changes in the US tax law and the continuing preservation of this tax deferral advantage in Canada.
So from what I hear, when we're talking about the US, now that President Biden has come into power, there's a lot of rumors going around about their new tax regime, right? Is there anything that we should actually keep in mind, especially as I know you're having preventive discussion with your clients. So what should we keep in mind? What are you talking about?
Yeah, this is a great question. So this may require a much longer discussion, but at a very high level, some of the tax changes for US individuals proposed by the Democrats are an increase in the top marginal federal tax rate from a current 37% to 39.6%. Capital gains and qualified dividends may also be taxed at this higher rate of 39.6% if US individuals earn over $1 million of income. So this is a very important consideration for high income earners, especially in respect to capital gains. So in this scenario, if the gain is taxed, let's say at 39.6% in the US and say 27% in Canada, even after FTC, these taxpayers effectively paying 39.6% on that gain. So we're looking at some US tax leakage here. So to tie this in to your original question, like should I incorporate? This answer, I think it will necessitate a greater deal of analysis. So for instance, incorporating the medical practice may allow flexibility to manage the level of income this taxpayer realizes in his hands to preserve these preferential tax rates on capital gains. At the same time, I think that consideration should be given to the impact of the 2017 tax changes that were introduced in the US, in particular, the impact of the GILTI tax. This is an anti-deferral rule that, put simple, creates a current inclusion of corporate income in the hands of the US individual shareholder. So this is a sort of a phantom income, I would say, since the corporate earnings remain reinvested in the corporation. Now the question is this current income inclusion brings us back to square one in respect to preserving these preferential rates for capital gains. So as you can see, there are many critical aspects here to consider.
You just mentioned the guilty tax. This is a very complex point that a lot of dual citizen, when they incorporate, they have to deal with. Maybe you can tell me a little bit more about it.
Sure. So again, this is a very complex subject, and we can spend the full day discussing this. But I would like to make another comment on this. So currently, the impact of guilty tax can be minimized or eliminated, especially for doctors practicing in Quebec. So this is achieved through an election that allows the corporate taxes paid as foreign tax credits in the hands of the US individual taxpayer. Also, we have, as an alternative to claiming these foreign tax credits on guilty income, a high tax exclusion that can offer some relief from this guilty regime if the Canadian corporate tax is at least 18.9%. So as we mentioned earlier, the current tax rates hover around 20.5% and 26.5% for incorporated doctors in Quebec. So there should be no income imputed to the US individual shareholder in this scenario. Nonetheless, and since we have not discussed sufficient complexities around this matter already, we have to consider, the impact of possible changes in the US corporate tax rates as well, as proposed by the Biden administration. So just to put it simple, guilty rules are very dependent on US corporate rates. So if US corporate rates were to increase now from the current 21% to 28% as proposed, then we may expect some US tax leakage even after the use of the exclusion or the election that I have mentioned earlier, and mainly if this corporate income is taxed at small business rates in Canada. So just to give you an example, for a Quebec resident medical practitioner, electing out of the small business rate may be an alternative to minimize this guilty exposure in this particular scenario, yet preserving the Canadian tax deferral advantages to a greater extent.
So what I hear in conclusion is this is a very complex situation, and there's many little points that we need to keep into consideration. So it's a real puzzle at the end of the day. So what I get is if you're spending everything you make, forget it, don't even bother. You're just going to be adding professional fees. So don't go with that. But if you don't, and you are capable of saving quite a bit of money, then go seek a professional. Trust me, it's a lot cheaper than actually, there's a lot of information out on the web. We're never too sure of the source. We're not ever too sure of the timing. Things change every day, and we have to be on top of that. So it's cheaper to actually go see a professional than do it yourself and then having to undo and then go see the professional. So thank you very much, Beatrice, for being with us. As always, your information is right on. And let us know, as the audience, what your thoughts are and what was your experience. So thank you very much, and until next time.